Over the next 10 years, the US will achieve energy self-sufficiency. What do you expect and how will you manage the change?
Well, I think it's clear that we've seen a dramatic transformation in the US energy industry, predominantly driven by new techniques of horizontal drilling and fracking. And that's led to self-sufficiency in gas production. That's why we've seen US gas prices come down to the level they're at. And it's also suggested that we may see self-sufficiency in oil and liquids production. It's early days, but we've seen dramatic rises in US oil production over the last few years, and I think it's fair to say that those rises will continue, albeit possibly at a lower growth rate overall. So I think in terms of the transformation of that industry, I expect, yes, if you include Canada in terms of oil and the oil sands, along with the US shale, we will see self-sufficiency in energy in the US and North America more broadly. Gas, we're already self-sufficient, so that really is a dramatic turnaround for the US economy. It perhaps means that the trade deficit is ultimately reversed. It's very positive for the US currency, obviously, and I think very positive for industries in the US which benefit from a lower price of gas and actually a lower price of oil. So what do I expect? I expect it will be very problematic for European manufacturers of refined products and petrochemicals companies to really compete effectively with the US now that the US benefits from much lower prices and this abundance of production.
What kind of approach guides your stock selection?
Well, that's an interesting question. I think we are very focused, and what differentiates us from perhaps other investors, we're very focused on the industrial dynamics of oil and gas production and refining. So we look individually at each well that is drilled and we assess that on its own merits. So we're very focused on seeing a positive recycle ratio for every well, every incremental amount of capital expenditure. So if you and I drill a well and we put, let's say, $1 million in the ground, we will want to see a stream of cash flows of $2 million back for us to justify that drilling program. So we're very focused on returns, and I think given the skill set we have at Lombard Odier, we can effectively analyze those wells in an industrial context and forecast what those returns are going to be.
Will the traditional sources be able to meet the ever-increasing demand for energy? And among them, which will be the most used? What's your outlook on renewable sources?
Well, the traditional sources of energy have certainly undergone a dramatic renaissance in recent years, as I mentioned earlier. So I think now that we see gas self-sufficiency in shale gas in the US, certainly for the developed economies of the world, I think it's fair to say that we will rely on gas for some time to come, for at least the next 20 years. I think more broadly gas will be the choice of fuel of the future. That's underpinned by some of the massive gas discoveries offshore Africa and also in Asia as well, along with the shale gas trend. I think we'll increasingly see gas used as a transport fuel, either in LNG form or in a compressed form. We'll see large intermodal transport hubs using gas to go from point to point. I think we will still be heavily reliant on oil. I think it's very hard to generate the kind of energy productivity that you get from hydrocarbons from other sources of fuel, for example, renewables. I think renewables will become more important, but it's going to take a lot longer than most people think. At the moment, they don't really match the cost curve of oil and gas production. They're not as efficient, they're more expensive to produce. And without subsidies, and we're seeing pressure on subsidies, particularly in Europe because of government budgets, it's going to be hard for those other sources of energy to compete. So really the focus on renewables will probably be more in the next decade and the years ahead from there.